This is probably going to be one of my favorite teachings, and probably yours, hopefully. So, the power of three, or AMD, has so many different names because people in the trading space love to create loads of fancy different terms, but we're going to go with power of three or AMD. So, PO3, AMD. AMD is short for accumulation, manipulation, and distribution. Some of you may have heard of it, otherwise known as AMD or PO3. Power of three, power of accumulation, manipulation, distribution. This is one of the most crucial teachings, so please take this one in. You have three stages, obviously, within the power of three. Let's dissect each and every one of them. Accumulation is the first step, or otherwise known as consolidation, right? This is the first part of this equation. Accumulations are, of course, to create indecisiveness in the market, building traders, long and short positions, right? So they're both building biases on both sides. It is to create an uncertain market. Okay, so if they were to go long, there would be sellers. If they were to go short, there would be buyers. There would be buyers, right? Whenever we see this standstill, sideways, choppy price action, we have to sit on our hands and wait. As traders, you have to know when to wait. You will, when you come to, you see these people online who are trading for like all day, every day, and they have trades every single day. I promise you, 9 times out of 10 of those people are not profitable. Okay, because you need to know when to sit out, when to understand that the markets at the minute are unpredictable, or when there is just chop. You can't trade in chop. With this consolidation, you will save yourself so much heartache by just sitting on your hands and waiting. Okay, you do not lose any capital by waiting. It's not like this is the last bit of price action you can trade, right? There will always be another daily candle, another 4 hour, another hour. There will always be another candle, right? So you just need to wait the consolidation out. Now, it is an adjustment to just sit there and wait, and it may seem quite counterintuitive, but it is the best thing for trading. You have to sit on your hands at some points within the market. So again, this is a fractal concept. Happens on every time frame. You'll see a power of three on every single time frame. Now, after the manipulation, you can box out the manipulation if you want. So then obviously the manipulation is in red. Now, as I go through the power of three, I'm using one example here. So as we see, this is the second step, manipulation. So after we have identified an accumulation, we now wait for manipulation, the yellow box. So this is going to be a move in the opposite direction to your bias. Let's say prior to this manipulation, let's go back to, we are just in consolidation, but we, on our higher time frames, we are expecting price to be bearish. We're expecting price to go down. We see this consolidation. We're like, okay, power of three in the back of our minds. Accumulation, manipulation, right? We then wait for this manipulation. The manipulation is a move in the opposite direction. So a move to the upside, that is the opposite direction because we want bearish expansion. So we're waiting for bullish manipulation. So when you start to see this and you see price break past this barrier of consolidation, this is a very good sign and that you need to watch here. Right, this is where you need to start watching price. And this is obviously vice versa for a bearish. If we were bullish, we'd want to see a move to the downside before a move up. So with manipulation, it needs to induce opposing liquidity into the market. I've gone over this a lot, but we will go over it again. If we are buying, we want sellers to be induced. Remember, we link back to how smart money positions themselves into the market. If we are selling, we need buying to be induced into the market, and if we are buying, we need selling to be induced into the market. Okay, golden rule: before you get in any position, note this down, what I'm about to say. Before entering long, sellers must have been induced into the market. Before going short, buyers must have been induced into the market. So after we have A and M, then comes distribution, right? This is the move we want to get onto. So this is the same example, but we have taken it down a time frame just to show you how powerful this move is, right? So within the green box, this is the distribution phase. After manipulation, you then want to see price swiftly move in your intended direction. Okay, this will confirm AMD. Now, considering that time is fractal, let's say you can see a AMD on the daily, right? Let's say you've had accumulation on the daily, and then price goes lower, and then price starts to expand up. You can then, because it's on the daily and you're trading daily candles, you can then be bullish for those daily candles for the expansion phase, right? Does that make sense? Let's say this was the daily, each was a day. We had manipulation, we had distribution. You can be bearish on all of these days, okay? I find it is higher probability to wait for the first leg of distribution and get in on the retracement. Okay, get the market structure shift confirmation and then get in at a PD array you set as your entry. So you will come to see that the power of 3 is a very useful concept. High probability PO3s are where there is consolidation and then manipulation fills an inefficiency. Okay, so let's link it back. Price goes to fill inefficiencies and then seek liquidity. That is, remember, that is what the market books on. So let's say there is accumulation. Price goes up into a fair value gap. That is considered manipulation. And then you get in with the distribution, right? Maybe the manipulation goes into a fair value gap, or maybe it goes into an order block and then it begins to expand away from that, right? It's all linked back together. If you see a PO3 on the hourly, look at the 4 hour and watch the manipulation phase. It is usually a candle called an IOFED, an institutional order flow entry drill. What is this, right? This is characterized by a candle that is manipulative at the start of printing. It prints one way to fill an inefficiency and then sweeps a low or high. What do I mean by this? Right, this candle is an institutional order flow entry drill. So is this candle. It is a candle that starts. It starts off very bullish. It goes in to fill an inefficiency and then shoots away. If you go on the lower time frames, that candle is usually part of the manipulative manipulative phase of the AMD. Let's see if we can spot any. So for new people, it may be quite hard to see, but there was sort of accumulation here, right? We have price break. This is the manipulation. Then price breaks down. You get in on the retracement, goes down. Okay. Let me look for an institutional order flow entry drill. This here would be an institutional order flow entry drill on the 4 hour. See how, let's mark this for, so it is 7 on Tuesday the 9th, right, of April. Let's look at that candle on the 9th of April. So this would all be one candle, right? So this is where the 4 hour would start. 4 hours started here. Price comes down, takes this low, right? Price takes this low and then shoots up in its intent direction. So it starts off bearish with a large wick, right? Where is it? This is institutional order flow entry drill. This is also an institutional order flow entry drill. Okay, price comes up, fills this inefficiency, shoots back down. This here would also be an institutional order flow entry drill. You see how price would have started, come and filled this imbalance here, and then it shoots back up. It has to shoot back up, right? And this usually happens very early on in the candle. So within the 4 hour candle, the first hour would have just been this massive green candle. And then the next 3 hours, it would have just been going up, back up, right? Now, if you have this, it does show bullishness. At least it did show bullishness for a week, right? And obviously this institutional order flow entry drill showed bullishness, right? They are an indicator of weakness or strength. So institutional order flow entry drill, this is strength to the downside, right? Trying to get clear cut ones for you guys. Now this is one where institutional order flow entry drill just didn't work. Okay. Because price just carried on going. Institutional order flow entry drill, move lower. Okay. So we're going to end that one there. Go and find some yourself. Remember, AMD, accumulation, manipulation, distribution.